Hello, everybody. In the current affairs this week, the week ended 28th of July 2024. This was a week packed with a lot of action. All the action started on account of the Union Budget 24-25, which was presented in the Parliament on 23rd of July. It was very strange that the people who are considered to be the smartest on the stock market proved to be wrong, and the government proved to be right in assessing the mood of the stock market. You will feel what am I talking about? The fact is that in the last week, when I was talking to you all, I said that the Indian mutual funds are sitting on cash and they are expecting that there could be a correction in the stock market, and that would be the right time to deploy the cash which they are holding. They all thought that the valuations in the Indian stock markets are quite high, and the decline, at least momentarily, would be triggered by what would be provided in the Union Budget. In the Union Budget, as we all know, the taxes on short-term capital gain and long-term capital gain got increased. So everybody thought that now is the time when the decline or a certain level of correction in the stock market would get triggered. But the government's calculation were much better and much clearer. They were clear that there is a lot of liquidity chasing the Indian stocks, and even if we increase the rates of tax, that would not matter this red hot market. And that is exactly what happened. On the day and maybe the day after the budget, there was some kind of a correction. But talking on last Friday to this Friday, the Nifty 50 was up by 1.3%, and Nifty mid cap and Nifty small cap both were up around 3% each. So whatever was provided by way of increased long-term and short-term capital gain got very well digested by the stock market, and people who are watching the stock market looked at whatever was provided otherwise than the increased rates of tax in the Union Budget. So the government proved to be much smarter rather than the people who are considered to be the market observers. The another market which got severely impacted on account of what was provided in the budget was the Indian precious metals market, the gold and silver market. The reason was very simple, that the import duty on gold and silver, which was before the budget 15%, was scaled down to 6%. This led to a sudden slump in the prices of gold and silver. So everybody, including the dwellers, the households, the people who have invested in the sovereign gold bonds, they suffered a sudden loss in the valuation of the precious metals which they were holding in one form or another. The price of 24 karat gold, 10 grams on IBJA was 74,350 last Friday, and this Friday it came down to 68,730, which was a decline of around 7.5%. As far as silver, it was 89,700 per kilo of silver, which came down by 9.65% to around 81,000. So now the Indian gold and silver prices would be more and more aligned with the global prices. The third segment or the third avenue of investment which got impacted was the real estate sector. In the real estate, the long-term capital gain, the way the taxation happens in respect of any long-term capital gain tax on sale of real estate got a change under which the long-term capital gain, which was taxed earlier at the rate of 20% after indexation, got changed to 12.5% flat rate of tax. There is a lot of resentment amongst the people at large for this change. The change has not impacted everybody in a detrimental or increased tax liability, but at least maybe in 50, 60 or maybe even 70% of the cases, there could be an increased tax liability. So what is being talked about is that the government might be under a pressure that they would have to at least give some kind of a concession, which could be like that the value of the property as on 1/4/2001, or if it is purchased thereafter, the valuation plus indexation till 31st of March 2024 would be freezed, or the value, which is the stamp duty value as on 1/4/2024, which could be freezed, or there could be two regimes, which could be that the value which is the earlier way in which the indexation plus 20% or 12.5%, which is the new way of taxation, whatever is better could be chosen by the person who is paying taxes. But we expect that there will be some kind of a change, at least in the way the taxation is going to happen insofar as real estate is concerned, on account of a certain level of resentment with the people at large. But my reading and my observations say that the 12.5% tax on real estate is going to be something which could lead to more and more formalization of the economy. Whether we accept it or not, the fact is that across India, there is a substantial component of cash which is involved in real estate transactions. But now on, if somebody is going to receive any sale amount by way of cash, they would rather think that it would be better receiving the money on the official channels and pay tax at the rate of 12.5%. And we think that over a period of at least 3 to 4 years, it will lead to more and more formalization of the economy. This is all for this week. Thank you.